Hey everybody, welcome back. Hopefully you saw my other deeper dive video on entry rules. And if you recall, I talked about 3 occasions where I am able to enter a trade and what the sequence is for each and what the factors are that you have to follow. And that was a standard C1 signal, a baseline cross, and a continuation. So what I wanted to do is follow up. I thought it might be helpful to just go through very slowly, step by step, showing you pictures of how this all fits together. So let's start with just your standard run-of-the-mill C1 signal. And this is what every great algorithm is based on, is a really strong confirmation indicator. So before we get started, let me just go really fast about what is on my screen. This is actually a picture. It's not a live chart. The yellow line going across there is my baseline. The green and red line on top of that is my confirmation 2 indicator, or my secondary confirmation, which is super trend. In the middle here is my main C1, my main confirmation indicator, and that is absolute straight histogram. And then down here I have my volume, which is Y. So let's go through the rules. So in order for a C1 signal to be a valid entry, first of all, obviously, we have to have a change of our C1. So if we look over here, we can see where that one changes color, right there. It goes to red. So our C1 is giving us a sell signal. Now what we need to do is just make sure, does everything else agree? The next thing we're going to check is the baseline. And again, here's our baseline. So yes, price is beneath the baseline for a sell. Now in this particular case, it's actually crossing the baseline at the same time, but please know that's not necessary or required for a standard C1 signal. The next thing is you have to make sure that it's within 1 ATR. So you don't want this price to be too far away from the baseline. Okay, see how that's coming down, not too far away. So check, those 2 things are good. Second thing we want to, or the next thing we want to make sure is that our C2 agrees. So we look up and there, our super trend agrees. So that is good. And finally, we need to make sure that we have sufficient volume to support the trade. So we come down here and we look at our way, and yes, there we go. We have sufficient volume. So when all 3 of these line up on that initial C1 signal, we do have a valid sell. Now for this setup, we do have a 1 candle rule, which gives us kind of a little buffer. It gives us leniency to wait for 1 candle if everything does not line up. For instance, we get a sell here, but for some reason volume wasn't enough to support it. We could wait 1 more candle, and then if everything still lined up and our volume came into place, we could then take the sell. But we only have 1 candle leeway there. So that's a standard signal. The next one is a baseline cross. So this is a little bit different because it doesn't necessarily have to line up with your first or second candle for your C1 confirmation. So let's take a look at what we're seeing here. First of all, price crosses and closes on the other side of the baseline. Okay, so we see this. Well, first of all, wait a minute. I want to back up and I just want to review what we had talked about before. Okay, so we talked about our C1 signal, and in this case, things did not line up, right? We got our signal, we had volume, but price was on the other side of the baseline and our super trend did not agree. So we had our 1 candle rule. However, still did not agree. So our C1 signal is a no trade. It's a no-go because we only had 2 candles to get there. However, now we see that price has come across the baseline and closed on the other side of the baseline. Right there. And it is within 1 ATR. Okay. And we look down and we see that our C1 does agree. Doesn't have to be a fresh signal. It just has to agree at this point. And then number 4, we want to make sure we have enough volume. Okay, so there's our baseline. There's our C1 confirmation. C2 confirmation up there still says okay, and our volume is okay. So in this case, this is also a valid sell signal. And this one just happens to be a baseline cross because it's not a fresh C1. So that's how baseline crosses are a little bit different than just a simple C1 signal. Now there is something to consider though for this type of cross, is that you have your bridge too far rule, or the 7 candle rule. And what that means is wherever this baseline cross occurs, it cannot be more than 7 candles from your C1 signal. So in this case, this is our crossing candle here. It's 1, 2, 3 candles back. However, if it would have crossed way over here and everything else was still in alignment, but you counted back 1, 2, 3, 4, 5, 6, 7, that's what VP just says is a bridge too far. It's too much of a delay from your C1 signal. So that's the one rule you need to watch out for baseline crosses. And finally, I talked about continuation trades. Now, I will caveat this. This is a different kind of continuation strategy than the one that VP talked about. VP gave the example of MACD, having the 2 lines that cross either above or below the 0 line. This is different. This is what I use. Just take it with a grain of salt. If it's helpful for you, great. If it's not, then just leave it alone. Let it go. But I just wanted to share with you what I've been doing. So first of all, the first rule of a continuation trade is that you would have already had some type of previous signal in the past. So somewhere up here, we would have gotten a valid sell signal. Now, maybe we're in the trade, maybe we're not. Maybe we missed it. Okay, but there is a nice trade going on here. So then our trade starts to go up and then it goes back into our favor. So the next thing we want to make sure of though is that that baseline has not crossed or closed on the other side. I'm sorry, the price has not crossed or closed on the other side of the baseline. So see how our price came up? It kissed it. It even shot some wicks up above it, but it never closed. And then it went back down in the sell direction. So in that case, we're going to start looking for our C1 to trigger again. And again, this is how I do it. So at this point, we get a new C1 signal once it's going back in that direction. So this is our candle right here. So we want to make sure that our C2 still agrees. Yes, it does. Okay, and we already know it's on the right side of the baseline because it never crossed the baseline. And finally, in this case, we have good volume, but volume really doesn't matter for continuation trades. Okay, we would have a valid sell at this point, and we just continue to follow it down. One thing, though, that you have to keep in mind for this type of continuation trade, number one, your 1 ATR doesn't matter because these candles are probably going to be a pretty fair distance from your baseline because they would have come up and then gone back down again, or vice versa. They might be way up above. And your one candle rule does not apply because this isn't your typical C1 signal. It is a continuation, so you don't get that 1 candle leeway. So there you go. That's those are the 3 situations where I enter trades now, and I really try to follow step by step all of these different factors to make sure they're all in alignment, they all say go, and they're all happening in the correct order. I hope this was helpful, and let me know if you still have any remaining comments or questions, and I will try to get back to you. Till then, happy trading, guys.